In this video, guys, we're going to look at how the 5-period moving average is becoming more and more useful for gauging strength in the markets. Stay tuned. Hey guys, a warm welcome to you. All right, so 5-period moving average. Normally, people consider the 5-period moving average to be, pretty tight, pretty close to price. Obviously, we know as we widen the moving average out, it comes away from price, but a 5 is quite tight. And I've never really used it so much. Now, there's one trader who's done a lot of extensive research on the 5-period moving average, and that is Linda Raschke. So if you want to kind of go and find out more about it, then go and look at some of her stuff. She's got some bits and pieces online and her book, etc, etc. I'm nowhere near the level. I've not done anywhere near the kind of study. I just literally eyeballed it. I know that she looks at it, and I've from time to time put it on because I think for very strong trends, as always something I find in the back of my mind. But in this video particularly, I want to kind of just bring it to your attention and say, hey, listen, guys, as very often now, price is sitting and hugging that 5-period because we're getting these, strong, persistent moves, and then they get a pause, and then maybe it reverses. But rather than the kind of traditional, dare I say, way of having like a 20-period where it would used to kind of float along, come back, pull to it, it's changing a little bit. I don't know if this is a continued trend. It is something that's just the stuff I'm watching, but I don't think it is. I think that this is something that maybe is because of the environment we're in. Maybe it's because of the algos that I don't know. But what I'm saying is, guys, I'll kind of bring this to your attention and say, listen, the 5-period might be worth some more investigation. I'm going to put some resources into it. I'm going to kind of look a little bit closer. Like I say, there's way more studies done. And if you want to kind of look at some of the work that Linda's done, go and check out some of the bits and pieces she's got. However, let's go to the screens now and let's just see visually how it's affecting and how useful it potentially could be. Let's go. All right, so I've got it in front of you, and obviously I want to look at it from a daily chart perspective. I think that's where it comes into its own. But when you look at certain things, so I've got it set up here. I'm going to put it onto a little bit of a red color, make it a little bit thicker just so we can see it on the screen. And I'm going to change this as well to an hourly above, just so we can kind of get a see of what's going on. So this is really, if you see how many times, this is just a standard Dow chart, guys. I'm going to bring some currencies up in a moment. But you see literally in the past, kind of over the summer period, how useful this 5 has been. This multiple day move before you pull back to it and you flag and you go again, you kind of dip below it, you go again, dip below it, and then to the downside, you hug it for 4 or 5 days, you come up, and then again, well, this was a bit of a chop here. And then again, hugging it, not closing below for multiple days, and the same kind of thing again. This is interesting to me because normally if you have something set on, say, a 20-period, for example, this is now, okay, admittedly, you're going to say, well, price stays above it more, but it's giving back so much in a way that the 5 is becoming much more of a useful tool, in my opinion. Okay, so that's that. I wanted to show you also, guys, the DAX as well, because the DAX has been, hugging, and we'll look at some currencies in a moment. Look how this has been hugging the 5-period, 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 small pullbacks. This keeps you in the trade. So not only can it keep you in the trade, but it can trigger a first pullback type trade. And again, this is something that other people have done far more in depth with using the 5-period as a trigger point for getting into a trade. But look how this has contained price for such a long period, such long periods. And then we go to stuff like cable. This contained price after we've had a kind of reversal for multiple days. So if you're swing trading, what better way than keeping things tight? Before, you'd be so worried about the 5-period, but the 5-period is going to ping me out on the slightest little retracement. But we seem to be doing, these moves, and if you look at the hourly chart here, the extension's away, but we kind of sit high enough to not get pinged out. And when you do get pinged out, it's a kind of longer term flag, 4 or 5 day flag, and then you can assess whether you want to do to it. Euro not quite as kind of clear as the cable, but Euro is a bit of a bigger boy. But the same kind of thing. Ultimately, USD JPY, very, very interesting, because even here, this kind of move up here, sticking to the 5-period, you could use the 5-period to trail it. So if you bought this range breakout here, you're long. You're like, where do I put my stop? How do I, 5 period now becomes something you're not frightened of using, because ultimately you're not giving back more gains. Same with this. You've kind of sold this fake, pushed down here, staying with it, multiple days move, and eventually it kind of pings you out here, or you make your decision. So let's just look at some of the commodities as well. Similar kind of thing, but obviously don't forget, if you're chopping around, then no moving average is useful. It's for getting on to larger trends. Gold, when it does have its kind of trending in times, pushing up, getting going, again, being able to trail around the 5 period, maybe using a dip below as an entry point to get back in. Same kind of thing with silver, but when anything's chopping, no use. One final thing I will look at, guys, is crude oil. Similar situation, hugging that 5 period. Natural gas, if you're a natural gas trader, when it goes, and look at natural gas, hugging that 5 period, hugging the 5 period, little dip below, goes again, hugging the 5 period, dips above, goes again, and we're about setting up the same kind of thing. So this isn't really a video about all specific strategic rules for it, but I just maybe want to alert you guys and say, hey, you may be using the 20, you're familiar with this and that. It can't harm, I don't think, on the daily charts to kind of stick that lower moving average, because we kind of get the best of both worlds, right? Problem with the wide moving averages, yeah, it contains price, it contains noise, but you're giving back so much, you have to wait for so long, etc. A 5's hugging price, and if price is staying with the 5 again and again and again, get an extra day with it, 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 and you can hold it and say, well, this is not going to give back too much because it's so tight. It's keeping with price. It's quite a nice thing to do. So it's staying with the trend. Number one, is a useful thing for the 5 period, and like a trailing type stop. And number two, an alert for a slight retracement, slight pause on the daily to consider, hey, we've come back below the 5 period, we've multiple kind of runs above it, we've come back below it now, maybe it's time to look intraday at our hourly, at our 15-minute, whatever, to fine tune an entry. And if it's long, maybe we're looking for something on double bottom, a test to the prior day's low, all that kind of stuff to maybe initiate a trade for a further pushback to highs. So 5 period moving average, guys, coming into play a little bit across multiple markets. I think it's interesting. Do some research on it, do your own kind of work, have a little look around, see if it fits in with your strategy, and maybe this is something that can have a permanent place on the charts moving forward. All right, guys, take care. See you in the next one. Bye bye.